Welcome back, everyone. We have an update from West Red Lake Gold Mines Limited. Trades on the OTCQB under the symbol WRLGF and on the TSXV under the symbol WRLG. It's a mineral exploration company. It's publicly traded and focused on advancing and developing its flagship Madsen Gold Mine and the associated 47 square kilometers highly prospective land package in the Red Lake District of Ontario. Happy to welcome Vice President of Communications. We have Gwen Preston. Welcome, Gwen. We're excited to hear your update.
Thanks so much for having me. I'm glad to be here. Yes, so I'm here with West Red Lake. We were here a couple months ago, so some of you may remember the basics of the story from then. Those were just my forward-looking statement disclaimers. I'm going to be pretty quick. I want to be able to get to a few questions here. So the key points here are really, we're a gold mine that is going into production this year. So in the second half of this year, we are going to be ramping up our mine and starting to produce gold into this really strong gold price environment. The build is complete. We're fully permitted. We put out our mine plan at the beginning of the year that shows the strong economics of restarting this historic mine. And those are strong economics before including or considering a good number of upside opportunities that are right in hand. And right at this moment, we're working on a bulk sample to prove that we can do the things that we say we're going to do. And we have a debt facility in place that we signed at the beginning of the year. That means that we're well funded for the task at hand. So that's the lay of the land. Now, I said that we put out a mine plan at the beginning of this year. That was officially called a pre-feasibility study. I'm just going to run through a few of the numbers in that mine plan. It gave the project a $315 million net present value. Now, I really want to emphasize that that was done at a $2,200 gold price. So I would suggest that the net present value is considerably higher at current gold prices. And this is a mine that we're in the process of turning on. So current gold prices matter. It's a high-grade mine. This is Red Lake, Ontario. There's been high-grade gold pulled out of these rocks for the past 100 years. The diluted, so the head grade that we expect, the rocks that we expect to bring to the mill, we think that they're going to average just over 8 grams per ton. That is high-grade gold. And by bringing those rocks to the mill and turning them into gold, we expect to produce $70 million. These are Canadian numbers for the dollars. Excuse me. $70 million in annual free cash flow. Again, that's assuming a $2,200 gold price, and we'll do that over 6 full years of operation. And that's sort of the lay of the land for the mine plan. Now, what I want to draw your attention to just for a moment, I noted that there's some pretty good upside from that mine plan that we have in hand. This slide really summarizes that a bit. The chart on the top right here, those bars show the number of tons from our deposit that could become mineable if you use higher gold prices when you're determining the number of those tons that make it into the mine plan. So the shortest bar, that's the one that made it into the mine plan, because when we did that, which of the resource tons make it into the mine plan, we used a gold price that was only $1,680. Obviously, the reality of the gold market today is very different. So the next few bars, blue bars there, become important. And those are the number of tons that could potentially be mineable at these higher gold prices. Really, that's the story of how this is a bigger mine than the pre-feasibility study outlines at current gold prices. And then there's opportunities that are right around where we are, that we are working to pull into the mine plan. The picture in the middle of there is what's called our Fork deposit. It's really close to the mine. If you see on the right-hand side of that picture, there's an arrow pointing to a little gray bip. That is the closest of the underground workings, close to this Fork deposit. And so we've just realized the high-grade core of this Fork deposit. We're working to pull that into the mine plan. The map at the bottom, also important. First of all, it shows you where our mine is located. You can see in the top left of that inset map, that's Canada. The province of Ontario is in red. We are in Red Lake, which is on the western edge of the province of Ontario. And we have those 2 red land packages. The mine that we're putting into operation is in the lower of those 2 red packages. The upper red land package is our Rowan project, which also has a very lovely resource that's higher grade than the tons that we're going to be mining at Madsen. And so we're working to pull that into the mine plan as well. These all suggest upside from the mine plan that we just put out. And I think that's really important because this is the cash flow profile of the mine plan that we just put out. And you can see that the dashed line there is the amount of free cash flow each year. But I suggest that as we actually mine probably more tons, because we're in a much higher gold price environment than the study assumed, and pull some of these other opportunities in, that trajectory of that goal of the free cash flow per year, I think will be a fair bit stronger than this chart suggests. And what I think is really important is there's hardly any new gold mines going into production in the world in 2025 as we are hitting this phenomenal gold price environment. If you want leverage to the gold price, the best way to get leverage to the gold price is through new production. And we are one of very few companies bringing new production to market. And this cash flow profile already makes a lot of sense and generates strong returns. And we're actually operating in a much stronger gold price environment than this chart assumes. This is the capital structure of our company. About 320 million shares outstanding. Our market cap today in Canadian dollars is 254 million. I will note that I said the NPV, the net present value of our project, is over $300 million. And one of the things that, and that's assuming that $2,200 gold price. If you push the gold price higher, then the net present value gets up above $400 million quite quickly with just a 10% increase in the gold price, which isn't even enough to get us to current gold prices. That matters because as a company goes from developer building a mine to producer actually producing gold, the market usually re-rates the value of that company from, maybe half of the value of its asset to the entirety of the value of its asset. So I suggest that the investment thesis in the near term for West Red Lake is that we should see our market cap likely reflect the reality of us going from spending money to build a mine to making money by producing gold into this gold price environment. We're well funded to get this gold mine into production. We have about $15 million in the bank right now, and we have a debt facility with a group that's providing us the rest of the money that we likely need to get ourselves into production. And that's the quick update. There's obviously lots more to say, but let's see if there's any questions that I can answer in the last few minutes.
Great job. Yes, we do. Brad wants to know, do you even have your production costs nailed down? What is it coming in per ounce?
For sure. So that pre-feasibility study put our all-in sustaining costs. So as that term suggests, that's all the costs that are required to produce the gold and keep the mine operating over the next few years. The all-in sustaining costs are $1,681. So that's not high. That's right in range for a mine of this nature. And if Brad wants to have a long conversation, I'm happy to talk about the reasons that we think our costs will actually be a little bit lower than that. But that's where we're at.
Perfect. And Larry asks, at what rate do you expect to produce per month?
Per month, about 6,000 ounces of gold a month. It's going to be about 70,000 ounces of gold a year.
Perfect. And Ben asks, are there any infrastructure requirements or any variables that could delay production?
At this point, it's a great question, and no, there aren't. So you can see from this image here, this is what we bought. This is what exists on site right now. In fact, this shot is probably 6 months old, so site looks more cleaned up, and there's stockpiles visible now. But no, we bought an asset where the mill was built. There's already a headframe. There's 19 kilometers of modern underground workings. There's a huge amount of infrastructure already in place. A tailings facility, that's what's underneath the word highlights there in the background. That's the tailings facility. So no, we have it all in place. The big infrastructure project that we are pushing to complete ahead of getting ourselves into sort of regular production is what we call the connection drift. That's a tunnel that's connecting the two sides of the mine. And we're more than 80% of the way through that project. We've been working on it for the last 6 months. So no, infrastructure wise, we're set up. We have what we need.
Wonderful. And Dan asks, are you eyeing any other properties?
We are always eyeing other properties. The foundation of this company is to provide a rising gold production profile in a strong gold environment. We want to produce more gold each year as this gold market progresses. We're just at the beginning of that now. We're just about to produce our first ounces from the bulk sample that is underway. And we have plans to increase the amount that we're producing at Madsen by incorporating some of those nearby opportunities. We're looking regionally for opportunities that might be synergistic with what we have at Madsen. And we're looking farther afield to see if there's other assets that we can pick up so that we can deliver the thing that is our MO out there, which is to deliver increasing production into this strong gold market.
And Eric wants to know, what is the life of the mine?
So according to this pre-feasibility study, it's 7 years, but I will suggest that this pre-feasibility study only captures a small portion of the deposit that we know. That's just a nature of what we could get done in the time that we had to get the pre-feasibility study out before we got into production. There's a lot more meat on the bone than what the pre-feasibility study captures, but at this point, our officially defined life of mine is 7 years.
And last question for you, Gwen, you can close on this as well. Why is West Red Lake Gold Mines better than other options in the gold market for investors out there?
It's really that thing that I mentioned near the end of my short presentation there, which is that as you're getting into a strong gold market and Western investors are rotating into gold, getting interested in gold, the kinds of stocks that they traditionally go first are major producers, because they're just major producers, large producers with increasing growth profiles, so that are producing more gold, and for the best leverage to gold, the place that investors go are single asset companies that are becoming producers. So they're doing that developer to producer transition. And that's because that's a very tangible reason for the market to re-rate a company. You literally go from spending money to making money. That's a really important moment. There's very few companies that are doing that in the gold space right now. And West Red Lake is on that very short list.
Wonderful. Well, thank you, Gwen, for this update. We'll see you again real soon.
Thanks so much, everyone. Take care.
All right. We'll be right back.